Good morning, RGB and business owners. It's a beautiful Wednesday. I'm Christopher, IRS Certified Acceptance Agent, tax professional, and a business owner. Today, we are going to start the series for the 5 IRS emergency business funds under the CARES Act. For those of you who are participating our webinar today, please make sure you will all be placed on mute, and then after the presentation, we will go over with your questions. Let me make my screen a little bigger. So under the CARES Act, and I know there are so many of you that are still waiting for the loan and any other type of grants, but we have to make sure that we're maximizing the credit that the IRS is giving, especially for business owners. So that's why we're going to start our series, and this is the employee retention credits. How does it work and how does the business owner will benefit? I'm trying to move the PowerPoint. It's still okay. What is this? So let me fix my screen. There you go. I need to be a little bigger on the screen. There. Before we continue, our company is Wyco Tax. We are an all-year-round, all-in-one tax, payroll, bookkeeping service solution, both local and outsourced. We currently have 2 offices here in RGB, the Rio Grande Valley, but as of now, we are getting clients in terms of other COVID-19 relief from the IRS, federal, even the state relief from the city and even the county level. We are already working with those different organizations because all of their documents are requiring are the bookkeeping, or I mean your books, your taxes, your profit and loss statements are all part of all this COVID-19 relief. So that's why we extended our services on navigating and helping our business owners and entrepreneurs to get the most loan or the most grants that they can have that is available around the city and even on the federal and state level. That's why this is one of our client success story. She is a full-time mom and also a full-time business owner. She's been running her company for years now. Because we have been doing her books for the past 2 years, we know the impact that it brought to her business. That's why we were able to process, because everybody is overwhelmed on their job or their business, on running the business because of the COVID-19 situation. We help her to apply for the EIDL and PPP, and she got approved in less than 2 weeks. She's one of our success stories, because here we try our best to really facilitate and expedite all the paperworks with no problem, with no conflict in terms of the deductions and the numbers. We want to make sure that they are accurate and correct and in compliance with the CARES Act guidelines. Please feel free to visit us on our Facebook and our YouTube, but of course we are on our website. So I'm Christopher. Like what I've said, I'm an IRS certified acceptance agent, tax professional, and a business owner here in the Valley. Our current Wyco Tax performance report is are the following data. This is since we started 2015, the tax credits and deductions that we were able to claim for almost 2,000 of our clients was 4.5 million. These are the credits and deductions that would otherwise to be turned as a tax, but we able to help them to make the most out of their income. The IRS audit, we also handle tax resolution service. If you have any problem with your taxes, back taxes, if you have not filed taxes for your business, we were able to resolve more than 421,000 of audit as of July 1 this year. And currently, the EIDL application, there is 275,000 that were approved, together with the PPP 155,000, that the amount that we were able to apply for our clients. And also the shared work program For those of you out there that you have employees and you have to cut the hours, those cut hours or reduced hours could be covered by the state. And if you don't know how does that work, this is a good incentive for your employees, because the state will help you to pay your employees. For those past videos, we been produced more than 150 videos. Just follow us on Wyco Tax on our YouTube channel, and you have to click this link if you want to get the PDF tax, payroll, and bookkeeping checklist. The copy of this presentation is also available on our website as PDF format. The upcoming events that we have for tomorrow, the Thursday live chat, is how to build your brand through public speaking. I will be co-hosted by the previous president of Toastmaster, Brian Lee Martinez. You, at this point, since you are having Zoom presentation on your business, effective public speaking and connecting to your audience is the key, or are the keys enabled for you to be effective and efficient on your brand. That is what we're going to go over tomorrow. And then our next week, we already have another, which is the guidance on payroll tax deferrals for employers. We will go over in a case study of one of the businesses that we handled. So that would be July 29, and our company is bilingual. We offer Spanish and English community. This is our website. Go to YouTube, Wyco Tax, and please click subscribe. And also, if you want to download the free tax bookkeeping checklist or call us now, you guys have to go to the website, and even here in Facebook page. And if you're still having a problem with your tax, payroll, bookkeeping, we are here to help. Disclaimer, this material has been presented and prepared for informational purposes only. It is not intended to provide and should not be relied on for tax, legal, or accounting advice. Wyco Tax, we are an outsourced tax, payroll, and bookkeeping company. We are not associated with any institutions on this presentation, and because Wyco Tax is a private business providing resources for small businesses. So follow us on Facebook and check the events right there. What is an employee retention credits? For those of you, just right off the bat, if you don't get approved for your PPP, you are qualified. If you're already approved with the PPP, then you are no longer qualified with the ERC. So now, before we proceed with the details, as a business owner, when you are running a business, you need to be visionary, not just about your product or service, but also with your numbers. That's why, according to Bill Murray, this is the simplest way to compute the tax. And your federal tax, or the tax in general, is the highest expense that you will pay on your entire lifetime. How much are they taking off? Usually 30%. So 30%, let's say your total working years is 40 years and you're self-employed or independent contractor, your average income is 100,000. Your potential income for 40 years would be 4 billion. But guess what? 30% will go to tax. That's why Bill Murray says, if you want to teach your kids about taxation, all you have to do is buy him or her a cup of ice cream, and you have to eat 30% of that ice cream. And she will never forget how taxation works. The same thing with you. But the good news, if you are a business owner, you have the chance to minimize or potentially eliminate those taxes. I would like to see, we have some technical glitch. So on your own, you also have to do the same. You just have to know how much are you're earning right now. If it's 100,000, and how many more years are you planning to work? Then from there, you would be able to identify how much taxes are you going to pay. We're just having technical difficulties here. Okay, let's jump into it. Employee retention credit. What are we going to cover? The following topics will be covered. What is an employee retention credit? How is employee retention tax credit calculated, and who are eligible for the employee or the employee retention credit, or the ERC? The ERC This is the employee retention. It is a refundable tax credit against certain employment taxes equivalent to 50% of qualified wages an eligible employer pays to employer after March 12, beginning March 12, 2020, before January 1, 2021. To reposition my screen. Okay. The eligible employers can get immediate access. Like I'm telling you, the root word is immediate access to the credit by reducing employment tax deposits they are otherwise required to make. When we are talking about the employment tax deposits, we're talking about the FICA, the Social Security, the Medicare contributions, even the federal withholding. Those are the employment tax deposits that we are referring to. Also, if the employer's employment tax deposits are not sufficient, this is another thing, that to cover the credit, the employer may get an advance payment for the IRS. And we will give an example how does that work. That's why I'm saying the IRS will help you out if your employment tax is not enough to get this credit. For each employee, wages up to $10,000 can be counted to determine the amount of the 50% credit. So which means 10,000 per employee, 50%, that's $5,000 of credit. Then the question, can I get this credit in advance? Because this credit can apply to wages already paid after March 12, 2020, many struggling employers can get access to this credit. That's why you can get this in advance by reducing the upcoming deposits or requesting an advance credit. What do you call the form? Remember, the form is 7200, 7200. You just download the form to the IRS website, 7200, and you will see that this is advance of employer credits due to COVID-19. If you have more questions, because there are so many details and numbers there, we are here. That's why we are a payroll expert company. We can process together with your the form. We can submit it for you. The business that are eligible include the tax exempt organizations are eligible. We're referring to nonprofit companies or institutions that are eligible for the credit if they operate or trade or business during the calendar year 2020. There are two ways, or there are two things that you have to remember to qualify. You need to experience one or the other. It doesn't need to have two. Any of this, if you experience this, you are qualified. Number one is full or partial suspension of the operation of your business and during the calendar quarter because of the government order limiting commerce, travel, or anything that has something to do with the activity of your business. What does it mean? If you own a restaurant, if you own a restaurant that you serve dine-in and drive-through, then no longer dine-in. If they, let's say the ordinance of the city, they said, okay, you're no longer allowed to do the dine-in, you are qualified because what? It says partial suspension. If you own a gym, a fitness center, and they said you can no longer occupy what? You cannot occupy more than you cannot allow 100% capacity of your gym. They only allow you less than 30%. Then you are on partial suspension of the operation. You are still qualified. Or significant a significant decline in gross receipts. We will show you an example how this one works. Okay, so next, a significant decline. What is a decline in the gross receipts? This is beginning on the first day. This is beginning on the first day of the calendar quarter of 2020 for which the employer's gross receipts are less than 50% of his or her gross receipts last year of 2019. The significant decline in gross receipts ends on the first day of the calendar quarter following the calendar quarter in which gross receipts are more than 80% of its gross receipt for the same calendar quarter in 2019. This is an example, okay? You're gonna ask me, Chris, there's so much information, I need an example, and this is how it works. Let's say calendar year last 2019, from calendar one, quarter one, you made 100,000 of sales. You own a restaurant and you're making so good, 100,000, but this year it's $90,000. So that's 90%. We're talking about more than 50% decrease. So you are not eligible for ERC if we're going to base on the gross receipts. Quarter two, where the COVID-19 hit, that they totally locked down last week of March, and then your sales went down because they shut down the restaurant, no dine-in, no curbside, etc. Gyms are closed. You have a bar, they close it. You cannot operate. So that's why 42,000, it's 42%. Therefore, when your sales drop by more than 50% compared than last quarter, then you are eligible to apply for the ERC. Together with quarter three, yes, they opened the business already. Like the Texas governor said, you can operate, but with precaution. Instead of getting $100,000 of sales for quarter three, you only made 82,000, 82%, and then you are still eligible to apply for the ERC. However, on the quarter four, even you made 70,000, that's only 70%, you are not eligible to apply for the ERC. So watch out for Q2, quarter two, and quarter three. Which business are eligible? The credit applies to qualified wages, including certain health plan expenses paid during this period or any calendar quarter in which operations were suspended. What are the qualified wages? The definition of qualified wages depends on how many employees an eligible employer has. This is the calculation. If you have more than 100 full-time employees, that is why, based on our analysis, if you have more than 100 employees, you might be better off applying for the ERC rather than the PPP. If you have less than 100, you have to try first the PPP before going to ERC. If an employer average is more than 100 full-time employees during 2019, the qualified wages are generally those wages, including certain healthcare costs to 10,000 per employee paid to employees that are not, let me tell you this, that are not providing services because operations were suspended or due to the decline in gross receipts. If you have 150 employees, the credit will be based, let's say you let go of 50 employees, you suspended 50 of your employees. The ERC computation will be based on those suspended employees or partially part-time working to your company, that ERC, not to the 100, but rather to those employees that are not working full-time. But Christopher, what if it's less than 100 employees? This is the good news about for people who have been denied on PPP, have less than 100 employees. If you have 100 employees or less during 2019, the qualified wages are those wages, including healthcare costs, up to $10,000 per employee that you paid to any employee during the period of operations that were suspended or the period of the decline gross receipts, regardless of whether or not its employees are providing services. Which means to say all those 100 full-time employees, those are the computation, $10,000 per employee, you will get 50% of that 10,000 per employee's wage. That is a full amount. That is a good amount of credit that you have to take advantage of. And you need to talk to your tax professionals. You need to talk to your whoever you have, your bookkeeper. But if they're not available, this is the best time that you need to ask them how this works. So if you have what are the qualified wages? Example, all quarters, qualified wages, $10,000 for one employee, and you're contributing, let's say, $8,000 of Social Security tax, then the ERC and the Employment Retention Credit would be $5,000 per employee. The question, what are the impacts of the other credits on relief provisions? An eligible employer's ability to claim the Employee Retention Credit is impacted by other credit by this provision. If the employer receives a small business interruption, we're talking about the PPP. We're talking about the PPP loan. We addressed this already. You are not qualified for this credit. So that's why only people that were not approved by the PPP and also did not apply for the PPP are eligible. Next question, what are the other impacts? The wages for this credit do not include wages for this employer receive a tax credit for paid sick leave. If even you get a paid sick leave credit and also the family first coronavirus, the FMLA, the Family Medicare Leave Extended Act, they are different. If you receive credits for those, they are not part of this credit. This is on top of those other COVID-19 credit. Wages counted for this credit cannot be counted for the credit for paid family and medical leave under Section 45S of the Internal Revenue Code. How do you claim the credit? This is the golden question. This is the the most important question. You have to file your 941, which will be Form 941, beginning with the second quarter. The credit is taken against the employee's share of Social Security tax, but the excess is refundable under normal procedures. In anticipation of claiming the credit, employers can retain a corresponding amount that otherwise would have been deposited. And this is what I'm talking about. It's not just the employer's contribution. You could actually legally allowed to withhold, to keep and not deposit to the IRS, the federal income tax withholding, the employee's share of Social Security, and Medicare's taxes, which are about 7.45%. I believe that's 7-something%, okay? And the employer's share of Social Security and Medicare taxes. All of those contributions, you don't have to deposit that if you are applying for ERC up to the amount of credit without penalty. So can you imagine if in a 7% and you have 100,000 of payroll, 7% of that $7,000 is the credit that you can take. 10,000, so that's gonna be 5,000. But 7%, it's a big amount of money that will save you from other of your expenses to keep it going. How to claim the credit? You can also apply. It's not just the 941 that you need to have. You need to have this form 720. How do you download this? Just go to the IRS website and download form 720, fill that application, and I know that you can fax this form. If you have more questions, go to the website of irs.gov. And if you are not aware of this form and you're having it's too much work, then we are here to help. Like what I've said, so many entrepreneurs right now are not paying taxes because why? The IRS, they use the IRS code on their advantage. You have to strike while the iron is hot. This is the best time that you have to take a second look of all the IRS credits that is available or that are available for your business. Like for example, the Amazon 13 billion net worth last 2018 pay zero tax bill. If they can do it and they're making more than we do, then you need to also work the IRS to your advantage. Which one are you right now? Are you still running your business or the business runs you? That's why you would see life is not just working hard, it's working smart. If you need to delegate, you have to delegate and elevate and let the expert do the job for you, because you don't want any problem with the IRS. And at this point, audits are everywhere. The lender, the SBA will audit, the IRS will audit, the state will audit. So if your numbers are not matching and you're relying on good hope and good faith that it will be correct, then you need to take a second look. Even your book should be organized like this, because at the end of the year, they need to be consistent and correct. From all the city grants that you're applying, that's why we are trying to organize and clean up your books. This will be the one that the IRS and all the agencies are looking, not this one. This will go to trash. Sometimes doing it by yourself is not really saving, but it's taking so much cost on your end. So the company was established 2015. We are an all-year-round, all-in-one tax payroll bookkeeping service. We are now an outsourced business solution for tax payroll bookkeeping needs. Just before you even go to us, I want you guys to challenge you. Just check us online. Read our credentials, read our reviews, and it's up to you to decide. If you have a tax professional bookkeeper payroll, then that's good. You just have to keep bugging them and asking them of all these credits. If they're not aware of this, then that's why we are here to help. The reviews, we have the highest reviews in terms of offering financial services. We have in South Texas, we have 700 plus online recommendations because our customers speak for itself. Just check our online reviews, Hispanic or English. That's why if you want to know more, visit our website. And if you want to watch the replay of this video, go to the Wyco Tax on our YouTube channel, and there you can find this. And our website, if you want to download the free tax, payroll, and bookkeeping checklist. And if you're tired and overwhelmed, we are here to help you guys. Because here, your success is our business. Thank you for watching. Now we're going to go with some questions. All right. Questions. So we have, let's see. Technology. This is so hard to adapt. Okay, so far that's all. We don't want to keep you go. We don't want to hold you. You can continue the rest of your day. If you have questions, we are here to help. Again, thank you for watching our Wednesday webinar. Just always remember, we are here to help and stay safe. Goodbye.